In this video, I'm going to be discussing 5 cryptocurrencies that I'm looking to accumulate more of during this bear market. And I'll explain to you why I'm looking to accumulate more of each one of these assets in particular. With that being said, if we take a look at what's actually happening in the market right now, Bitcoin has really started to form a tight range here around $30,000. If you kind of look at these two boxes that I've drawn up here, are kind of on a higher time frame, right? This is the weekly chart of Bitcoin looking, and looks like we've been ranging kind of in this range since January of 2021. So it is interesting. I think that just taking a look at this before getting into the 5 assets that I'm looking to accumulate, we do see that Bitcoin has closed 8 consecutive red weekly candles. We did have this big poke down here into like $25,000. Generally, these longer wicks are people pushing into this liquidity and then obviously suck back up quite quickly, which is generally sometimes a sign that, always a sign that there's a lot of buyers here, right? So maybe price didn't want to go further, right? Which we see here. We also see this bullish hammer candlestick pattern that's happening right here as well. And $30,000 is obviously like this key level that's happening here. So I think personally that it's not a bad opportunity to dollar cost average in. I have dollar cost averaged into some of these assets already, right at around a $30,000 Bitcoin. But I do think that I feel like the market hasn't experienced max pain, at least for Bitcoin and Ethereum holders. I have this feeling that maybe it could go lower. Maybe this push down here was it. I don't know. So long story short is I didn't, deploy all of my capital here at $30,000. If we can get it back down to 25 or 20, then I'll definitely accumulate at those lower levels as well. So with that being said, what are the 5 different assets that I'm looking to accumulate? The first 2 are a little bit more obvious. Obviously, Bitcoin and Ethereum are 2 assets that I'm definitely looking to accumulate. I'll explain why. If you look here, it looks like Bitcoin is down, 55% or so from all-time highs. I think that is a pretty good place to buy. Obviously, if Bitcoin doesn't survive, then crypto likely doesn't survive. Bitcoin is obviously the number 1 asset in all of cryptocurrency. So I think it's always a great thing to dollar cost average in. I haven't really bought any Bitcoin since around like $4,000, but I'm considering buying a little bit more here. Ethereum, obviously, this is another blue chip, second largest cryptocurrency. The reason why I think it is actually quite an attractive buy, Ethereum in particular, and I do expect Bitcoin and Ethereum to kind of outperform the rest of the market, at least for the little bit, right? Because obviously what happened with Luna and the UST crash, people are scared and people are running to safety. And I think the narrative in the market at least is that people view Bitcoin and Ethereum as safer assets, right? Now, with Ethereum, obviously, we have the ETH 2.0 merge coming up. Supposedly, that's set to happen sometime in August. If you're not up to date on what's happening with that, obviously, Ethereum is transitioning from a proof of work model to a proof of stake model, which is going to make it like 99.95% more green. It's supposed to be the equivalent to like a Bitcoin triple halving. Obviously, every 4 years, right? Bitcoin goes through a halving event where the supply that can be mined is basically cut in half. So this is supposed to be the equivalent of like a triple halving, which is going to potentially make Ethereum quite deflationary, which would be really interesting. If we just take a look at where we're at here, Ethereum is down like 57% or so from previous all-time highs as well. And it seems to be holding up pretty well around like $1,900, $1,800, $2,000 level, kind of equivalent to the Bitcoin $30,000 level. And so obviously I'm trying to accumulate more Ethereum. I definitely think it's a good thing to do. The deflationary pressure could be really good for price action of Ethereum. With Ethereum 2.0 merge, obviously it doesn't mean that the gas fees are going to be less, common misconception, but obviously it's hard to bet against Ethereum, right? Okay, so the next asset that I'm looking to accumulate more of is CVX or Convex. And if you're not familiar, Convex and Curve kind of go hand in hand. And if you don't know what Curve is essentially one of the largest protocols in all of decentralized finance. And the reason why I'm wanting to accumulate this is because if you believe that stablecoins are going to be a thing, if you believe that decentralized finance is going to be around, which obviously I do, then Curve and Convex is like the backbones, right? Curve is this basically this native asset swap where you can swap different stable coins for different stable coins. It has like the largest liquidity and also like the cheapest fees when swapping like assets. You can see here on DeFi Llama, it is like the number 2, only slightly largest in terms of TVL here in all of crypto, right? Which is massive. Now, Curve has their own token CRV. There's also CVX or Convex. And basically what Convex is it's essentially a protocol that allows you to earn CRV with a better rewards rate. To put it really lightly, and I'm not going to go really in depth on this video on this. It's a little bit more complex of a topic, but basically in order to earn CRV, you have to lock up your liquidity for quite a long period of time. And so Convex basically allows you to not have to lock up your tokens as long. And basically it pools CRV essentially to increase your reward. This is another crypto that I am looking to accumulate. However, come June 30th, there is a big unlock potential. So I'm probably not going to be accumulating until after June 30th. TFL or Terraform Labs, basically they own a whole bunch of this, and there is the potential that they could dump it right then, which could be, put some really downward pressure on price, which I think at that point is the time to start accumulating. So I will be looking out for this and seeing what happens there. A couple other assets that I'm looking to accumulate. Okay, Rune. You've probably heard me talk about Rune before if you follow our channel. Rune is currently down like 84, 85% or so from all-time highs, which is crazy. And just from this recent little pump that we had here, it's down back like 74%. So this thing has taken a beating, but I still really like it. And I think it's necessary. And what it does is it's a swap that allows you to swap assets across different chains. So if you think about like Uniswap, or if you think about Trader Joe or Pancake Swap, like any of these normal swaps where you can swap between different assets on a single blockchain, like Uniswap, obviously you can swap assets on Ethereum. Trader Joe, you can swap assets on Avalanche. Well, with ThorSwap or with Rune, it basically allows you to swap assets across different blockchains, which is really, really convenient. So as you can see here, you could swap like an asset on Ethereum to say like an asset like on BNB, right? Which is really, really cool. In order to do this, it requires the Rune token. So if this catches more traction, meaning that more people are using this, which I think is a good bet, then that's good for the Rune price. So it has taken a beating here, obviously, as you can see, but I think that this is something that's still going to be big. I think it's still something that's necessary, especially if there's a multi-chain world, right? It's going to be a lot easier versus having to go through bridging your funds across to another chain and then swapping. That's just kind of like a pain in the butt, right? So I do really like this. A couple other assets that I am looking to potentially accumulate. One is Near. Near is a layer 1 protocol that has obviously recently taken a beating like the rest of the market, down about 68% from previous all-time highs. It's another layer 1 blockchain that is heavily backed by some of the most successful VCs in all of crypto. Also, they have just launched their USN stablecoin, which is kind of ironic, right? Kind of really bad timing with the UST stablecoin going down just a few weeks ago, which I think has caused, a little bit of fear around this. So I am going to be kind of waiting around, seeing what is developing. But originally they had this stablecoin USN that was going to be algorithmic, similar to UST, which I think is scary at this point, right? But also they were going to back it with one-to-one collateral, right? Which made it a lot safer than a UST situation. So I still think that this could be something good. They had originally talked about a 20% yield, similar to what Anchor was. I think the market is spooked because of what happened to UST. However, I think this still could be something really good. I've interacted with this blockchain quite a bit, and I really like the way that it functions and works. And So anyways, I think this is something else that is worth like keeping an eye on. And then the last one, right? So this is 6, right? But the last one is Matic, which I think is kind of interesting. You can see here, we're down about 76%. The reason why I was interested in Matic is we see some interesting developments happening with Facebook and Instagram right now called Meta. But basically they're rolling out NFTs for Instagram, where basically you'll be able to display your NFT collection on your profile. Similar functionalities coming to Facebook soon, along with an augmented reality NFTs on Instagram stories. So I think that's really interesting. And supposedly, Stripe and Meta recently chose Polygon as their blockchain of choice, which is obviously really a big deal. If you imagine Facebook has access to literally billions and billions of users, and they've decided to use Polygon as their blockchain, which is quite interesting. So I think that could be good for Matic. So anyways, this is my thought process, kind of what I've been thinking through, what I'm wanting to accumulate. Again, I'm not going to just buy all in right here at 30,000. I will buy some of these assets here, but if we do get lower prices, then I'll dollar cost average in a little bit more here. With all of this being said, none of this is financial advice. Please don't just follow me blindly. And I don't want to see your comments. If one of these happens to not perform well, you saying, Adam, I followed you into this play and I lost all this money, like da 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 da. I mean, take some responsibility for your own actions. Like, don't listen to me. Don't listen to anybody else. Like, use this as an education platform, as a resource, but it should not be, hey, I'm going to follow whatever Adam does. Okay. With that being said, hopefully this video is helpful, and feel free to check out some of our other videos in this channel.